one group out of Chicago. I won't name names, but they were out of Chicago. They did a great job. They optimized their debt, and because they realized that that's a just as critical component of a investment, they optimized the debt. They've made $25 million off of their debt portfolio just by being appropriately hedged. That's outside of asset appreciation. This was appreciation and value in the debt.
Rob, welcome back to the show. Honored to have you as a guest again.
Oh, thanks, Whitney. I'm so happy to be here again. So thanks. I'm looking forward to it.
Why don't you highlight some of your career path, right? I know you have a compelling story. I want to highlight some of that for the listener because I know they're going to learn a lot from you and just how you get to where you're at right now.
Oh, sure. So I actually grew up in a real estate family. So my grandfather was in real estate. My dad was in commercial real estate. My mom obviously did commercial real estate as well because it was a family business, which meant, of course, I did commercial real estate. So when I was a little kid, I've done everything from leasing and canvassing to brokerage to on-site property management to construction to development to finance. Anything in commercial real estate, I pretty much have done that. Once I grew up in that real estate family, I was very fortunate. I got a job on Wall Street, worked on Wall Street for several years, and worked with the big shops, the Lehman Brothers, the Credit Suisse, First Boston's, all in this emerging world of securitized debt or CMBS. After that, I saw an opportunity for a process or a company that would help borrowers achieve the process of a defeasance. So anybody who's had a loan, a fixed rate loan, knows that in order to get out of them, or a lot of them, you have to have this provision called defeasance, and it is a transaction and a process in itself. And so I created a company called Defease with Ease, which has become since then and still is the industry leader of defeasance. In about 2010, we were able to really start going actively purchasing multifamily and office, as well as other securitized instruments. And so for the past 15 plus years, we've been investing in commercial real estate, as well as expanding on the services that we have through Defease with Ease to offer things such as derivatives, advisory, technology, anything in capital markets and asset management are all services that we provide under our 30 Capital brand.
Wow, it's incredible the growth path. It really how much of the commercial real estate industry or the different pieces of it that you all encompass, or have an expertise in, and it's quite impressive. And it's not many people can say they were doing all those things when they were a child, right? The leasing to construction to, like you had a major leg up there. I feel like on most of us, right?
Well, the funny part was that actually because I grew up in it, the first thing I wanted to do when I graduated from college was get out of it. I actually wanted to go to Wall Street, but I wanted to work in like mergers and acquisitions or international mergers and acquisitions or sales and trading, something like really cool and fun, not commercial real estate. And but lo and behold, they were like, wait a second, you've been in commercial real estate your entire life. You're going to go underwrite loans. So go in this room and here's your stack of deals and go crazy.
Not so fast there, right?
Yeah, exactly.
No, that's awesome. Yeah, what a great background to be in commercial real estate, whether you liked it or not at the time, right? So let's focus a little bit on, maybe 30 Capital at the moment. I want to dive into the tech piece. I know you all have such a strong, focus on the tech side of the business and asset management side, debt management, those things. And I want to get to some of that. Or actually, I want to back up a little bit more. And I'd mentioned this ahead of time. Your website mentions, you all create strategy for risk, debt management. I know you all are on capital side as well now, but you're helping, operators with that, the risk and debt management. What does that mean exactly? I want the listeners to know. There's probably a number of them who may be a good client for you, or how you could add a ton of value to them. What does that mean, and how do you all help clients in that way?
Sure. So I think I think I have to step back almost and answer your first question, which is, we believe at 30 Capital, and I believe that a proper investment manager, such as a real estate sponsor or a real estate investor who's syndicating their equity positions, there's three ways that you really have to create value in a property, right? There's asset optimization, but there's also debt optimization and equity optimization. And if you think about 30 Capital as a company, that's what we focus on. We focus on asset optimization, debt optimization, and equity optimization. And by doing that, we do this through a combination of experience in the capital markets. We do it as experienced asset managers. We do it as well as technologists. And we use technology and innovation to help basically provide that alpha or that special sauce that takes very complex theories and very complex things and boils them down to actionable items. So when we talk about debt management, for example, right now there's a lot of people, and everybody's talked about what's going on in the debt markets and this impending tsunami of maturing debts, and that's going to require a lot of sort of creativity and thought. And while I think a lot of people in the real estate space are very good at asset optimization, really hey, if I increase rents and lower expenses, I create more value for the property. Whereas debt, because it's a very specialized structure or product where you have things like forward rates, forward curves, you have LIBOR going to SOFR, has already gone to SOFR, but you have different term SOFR and all these other types of products associated with debt. Debt becomes a vehicle and a structure on its own. And so the debt management and debt optimization really comes in and tying into what we believe is the best case for the asset. How is the asset going to perform? And matching with the way that the asset is going to perform with the best debt structure possible. And that could be keeping your existing debt, restructuring your existing debt, finding new debt, finding new equity, whatever it is. And that's basically what we spend probably most of our time right now is with real estate sponsors who have a certainty of something happening within the next period of time. Either they're about to refinance or their asset is they may be struggling a little bit, whatever it is, that's where we come in.
Is there a specific size of operator or property that kind of fits your all's bucket, or does it matter?
It typically doesn't matter for us, but I think for the most part, we typically focus on the mid-market, right? So these are going to be people who have several assets, 300 million of assets under management and up, right? So they have 5 to 10 assets. That's really that's our sweet spot, our bread and butter. We have large institutional customers that have 150 assets, and we have customers that have 2 or 3, but our sweet spot is sort of in that middle market range.
Yeah. Okay. Well, speak to how technology is helping you all to do that, right? Or maybe even how the listener can use technology to better, their assets as well.
Right. So I think what's important is it's a combination of technology, but also knowing what questions to ask, right? I think technology and innovation sort of get looped in together and not necessarily correctly, right? Just because you think of innovation doesn't mean that you have to use technology. We use technology, and I've used this word. I don't think I've coined it, but I use this word a lot, which is consumable. And we believe in consumable technology. And that means I'm at an age where, yeah, I'm very fortunate. I've past 15 years, I've been involved in technology, and I've had multiple startups in the software space that I've sold off and all that. But for the most part, I need to be able. I put my real estate hat on, and if I cannot use the technology and find immediate value for it, it has no purpose for me, right? There's no need to do it because I don't have the time or skills to try to learn some special advanced AI language and programming in order to try to figure something out. So we utilize technology to help make our lives better. And I think we use technology to help distill a large data set and a lot of advanced analytics to make better decisions.
Yeah. Any time we can just remove the room for error, right? we're
Right.
we're way ahead, and tech seems to be helping us with that, obviously, in massive ways. Is there any tech specifically that that like the user could use to help with that at all?
Well, yeah, I think, look, it's all of this stuff is available. It's just a matter of how much you want to do, right? And that's what sort of it's really nice with other industries. Commercial real estate starting to get better, right? Yeah, 5 years ago, marketing automation didn't really exist in commercial real estate. Bots didn't exist in commercial real estate. Now that's sort of a standard practice. I think there are things like the data and analytics that you get from CoStar, data and analytics that you get from Moody's and Yardi. All these big systems are data in itself. It's just how do you utilize them, right? And it's about opening up your eyes as well as actually being active to go after and understand what is relevant and what's trending in your market in terms of new technology, new products that people can use.
It can be hard to adopt new technology, right? I mean, it's hard to learn. Like, you mentioned sometimes you don't have time to invest, in some technologies or figure it all out or learn it if it's not adding value immediately. How do you assess that? Even knowing how much time it's going to take to learn something, or if it's going to be worthwhile or not?
It all comes down to ROI, right? And that's really the key thing is you have to, as a professional, right? Your job as a real estate professional, a real estate investor, is to analyze a lot of things and make a common sense decision, but it's based upon data and fact. And then ultimately being able to take that the data and facts that you're getting from asking yourself questions, adding on to that, making sure that you have a feedback loop to make sure that that's actually accurate, right? Are you really saving time with this? Are you really making money with this? Are you really doing whatever with this? And so I think we utilize that sort of that same common sense goal that we have is when we create it, which is, can I use this quickly? And can I receive value quickly? A huge install, a huge implementation, a huge change of work. And we've been through this as our own organization as we changed CRM systems. We also changed property managers for part of our Southeast portfolio. And we changed a whole different system. So now we have all these different systems, and we created one of our companies called Lobby CRE, which is a data and analytics asset management platform, because we had different property management systems generating different information, and we needed to put them in and compare apples to apples. And so we created a system to do that.
That's incredible. We could all use some of that. That's for sure. We're working with different management companies and different information that's provided in some different places, or yeah, it would be great to have one place to look at all that and be able to compare. Speak to the asset management piece of technology as well. You mentioned Excel as an example earlier. How's it helping on the, say, asset management side as well?
Yeah, so I'll tell you, it's you have to be living under a rock or in the most amazing markets in the world if you don't realize that, especially in the multifamily space or any real estate space, this is now about operations. This is the time for asset managers to unite everywhere, because the acquisitions people were the stars before because they were buying deals, and in the past market deals were going up left and right. Now it's up to the asset manager. It's all about cash management, cash flow management, and preserving cash. Technology does an amazing job, once again, by taking a large segment of data and identifying to the user what is critical, what needs their attention. And that's really where we've been focused as an asset manager. If you think about this, if you're an individual asset manager, probably has 15,000 pieces of information thrown at them every month, if you will, right? You've got rents, you've got comp rents, you've got benchmarks. How's my property comparing to this property? If you're in Florida or Texas or one of these other markets, your insurance bill just went up 300%. You've got this, you've got that, you've got all these different things. It's impossible for a human to basically take that kind of information in and look at it from a black and white P&L or a rent roll or a delinquency report, right? You just cannot do it. And so the technology is out there in order to take that information in and deliver it back to the user so that they can consume it, that they can understand. I personally, I'm an old trader, so I like having sort of red, green, and normal color, right? And I like using triage reports. So part of my view every morning that I look, I have a probably 25 or 30 KPIs. These are key performance indicators. These are things that are really matter to me, like week over week occupancy, or delinquency, change in delinquency, change in AP, whatever it is. And I basically put thresholds around them. So if it's, hey, if my occupancy is just dipped below 95%, I want to see a big red. If my, if my accounts payable has gone up, I want to see a big red. And by being able to lay that all out, I can actually basically triage which properties I need to focus my attention on. That's the way I like to look at it. Other asset managers like to look at line charts and bar charts and graphs. Basically, it's taking this information and being able to do, once again, distill it. I sound like a broken record as I sit here and say this, but basically making the information available so that you can distill it and make good decisions off of it.
And that's part of the service you all provide to people, right? For other operators, right?
Correct.
Yeah.
Correct. We basically ingest all of their financials and rent information, all that stuff. We standardize it. So if you do have that thing where you have RealPage, Yardi, Entrada, and all that stuff, we consolidate it, match it to your chart of accounts, and then allow you basically unlimited visualizations on that. And in fact, we spend a lot of our time with our data science team, our data team, and our real estate team talking with owners and customers, helping them get the most important visualizations and data out in front of them and to their key stakeholders or their key people.
Do most of the clients that you all are doing that for have, say, in-house management or third party? When does that typically work best?
It's both. It's both. I think it's a easier use case when you have different property managers, right? Because you have different systems, different accounting trees, whatever it is. That's a no-brainer. But what's important is when you have your own property management team, it almost it's good in many regards, but in some regards, you're not relying on the data that's available to you. It exists, but you're not relying on it in the way that I think you would if it was front and center. So for example, we self-manage a handful of our properties. I know if I need something, I walk down to the accounting office and I say, hey, I need this. Hey, can you show me what our current delinquency is, right? As opposed to being able to look at it immediately. I'm at home and I'm thinking, geez, I wonder what delinquency is. Oh, I can go take a look at it right now. Hey, you know what? How does that match with the rest of my portfolio? Oh, and how does this match with the benchmark of the neighboring properties, right? Because we compare your properties to the market. And so you can actually see, hey, are we actually performing better or is it the market, right? So is it me or the market? What's going on? Is if rents are going straight up and mine are going flat, well, maybe that's me, not the market. If everybody's flat and then it's the market.
And it is something you hope your team or yourself or asset managers looking at on a daily basis, right? Those things you're talking about. And I do find as well, was exactly what you just said. It's nice you talk about, having that in front of you in a simple place. You even color code it. So it's like it draws your eye to it, right? And like I said, whether it's you or your asset manager, somebody's attention needs to be drawn to it, right? And it sounds like you have created a technology that helps kind of simplify the data accumulation process so we can get to that decision faster, right?
Yes,
and hopefully more accurately.
Right. And it comes down to the same thing, right? We believe, as I said, at 30 Capital, our high level thought is that there's three levers here in real estate. Really, there's asset optimization, there's debt optimization, and there's equity optimization, right? So there's and it's just math, right? Which one are you trying to solve for? Ultimately, you're typically, and you should be, solving for equity optimization, right? What creates the highest return for me and my investors? And that's what we're solving for, because that's what you're in business for, right? You go out, you money to go make good investments and maximize return, really trying to show alpha. And in order to show alpha, you have to basically optimize the asset. You have to perform the asset above the market, and you have to perform an optimized debt. So it's not as simple as, anybody who's had a floating rate deal who's coming due right now, and maybe they weren't hedged sufficiently or whatever it was. They're sort of feeling that pain of not optimizing your debt.
For sure. Is there maybe an example or a specific asset that you could highlight where where they've done specific things because of the information, or where they've optimized the equity in ways that maybe we wouldn't have thought of?
It was a situation where the property, and surprisingly, not every time you go and underwrite a property and you do your pro formas, is it all golden and rosy. And we went with our operation team and our asset managers, and we've said, listen, we've had a good ride on this property. What is it gonna look like for the next few years? And because we were looking, we said, well, boy, we could sell it, we could refinance it, or maybe we just go get a supplement on it and pay a lot of money for the supplement, but which one is the best deal? And by being able to match what the projected horizon was of the property, where we thought the property operations were going to be, basically NOI or net cash flow, we were able to match the appropriate term debt as well as the size and the structure in order to maximize our equity yields. And that's the kind of analysis that I think people need to do. And I think they get the people who optimize debt, if they did it correctly, they're heroes now. There's articles about them all the time in these real estate publications, where one group out of Chicago, I won't name names, but they were out of Chicago. They did a great job. They optimized their debt, and because they realized that that's a just as critical component of a investment, they optimized the debt. They've made $25 million off of their debt portfolio just by being appropriately hedged. That's outside of asset appreciation. This was appreciation and value in the debt. So that's why we look at debt as its own sort of vehicle as well. It's an important asset. It's an important consideration, especially when you think about how much debt you typically have on a property, right? If you're one of these, pensions and you don't do anything more than 40%, well, then okay, maybe that might not weigh true. But if you're trying to get 50, 60, 70% leverage, you need to, it's a big number.
It is a big number. It's such an important part of the whole process, right? I love how you just break those three things down and are thinking through, the tech side to help optimize ultimately, like you said, each of those things, because they do all matter in such a big way. Is there, before we have to end this segment, is there a few KPIs though that you would say, hey, Whitney, our listeners, these are the top 4 or 5 things that every asset manager needs to be focused on right now?
That's sort of a loaded question. I think it comes down to who you are and what you're looking for, right? I think there are a handful of KPIs, and I think it's who you're asking, right? Because I look at it, the way that I look at real estate and real estate companies is maybe a little bit different, right? So I look at a real estate company as a company who's in the business of providing basically investment for real estate. And I look at the way that they operate as a business, as opposed to the underlying sort of individual assets. Does that make sense? What I'm saying is that it's just like, to me, there's a way to, I monitor, like my KPIs are monitoring the business. How quickly do we return capital? How efficient are we with capital? How quickly do we roll over? How long are our investors with us? How long is this? How long is that? And those are things that how do we compare as a whole to the market? Whereas if I was an asset manager and I had a property, my KPIs might be completely focused on accounts payable, delinquency, basically leading indicators, right? Traffic, delinquency, and looking at debt forward curves.
Yeah. No, that's helpful. I just want anybody, any operators that are listening to be thinking through, hey, what are, I mean, just the fact that you're so focused on the KPIs on a daily basis and you have 25, whatever it is, I just hope that, like you said, this is the time for asset managers to unite. No doubt about it. It's so crucial operations now than it probably has been the last 10 years, right?
Well, I want to make sure I spoke correctly. I look at property, like a specific property level, as about 25 core KPIs. In total, I probably look at about 150 KPIs of what I'm tracking. I'm a big believer in OKRs, setting goals, and tying to and making sure that the KPIs, the data, is correct.
No doubt. Rob, unfortunately, we're going to end this segment with the listeners know that Rob's been very generous with his time. We're going to have another segment with Rob. We're going to dive into some other things and draw some expertise from him. But Rob, how can the listeners get in touch with you and learn more about you and 30 Capital?
So they could go directly to 30capital.com. They can also reach me at www.robfinlay.com.
You want to tell them about your book and about that, so where they can find that?
Sure. So yeah, thank you. We released my latest book. It's called Beyond the Building, and how innovation plays a part into commercial real estate. And this book really came from my background in commercial real estate, not only as my own insight, but also I was very fortunate to get a lot of real estate sponsors and real leaders in the industry to help give me insight and information sort of on how they do things. And being in this business for so long, it's always nice when you get to see somebody who's been, who's done something a little different that matters and makes a difference. And Whitney, as you know, you're actually, I mentioned you in my book because of what you've done actually with this podcast. I think is incredibly innovative and quite frankly, genius on how you built your brand and differentiated yourself. And I think that's sort of the goal of innovation. And that's what the goal of the book is to help real estate owners realize that they need to innovate, or else they're going to be the way of the Kmarts and the, and the Blockbusters.
Right, Rob, grateful and honored to be a part of that, and even just a little way. So thank you so much for that. I hope the listeners will check the book out and be with us again tomorrow, where we continue the conversation. Thank you for being with us again today. I hope that you have learned a lot from the show. Don't forget to like and subscribe. I hope you're telling your friends about the Real Estate Syndication Show and how they can also build wealth in real estate. You can also go to lifebridgecapital.com and start investing today.